the stock market has been doing terribly. And that's one of those comments that I know we hear a lot, like what's going on and how do you address it? We're going to talk today about some of the facts behind what's actually going on in the market and give you some information as a viewer that you can take and apply in your life to help you make decisions about your future investments. Hi, I'm John Scherer, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan, Mermel, and I've got a fee-only financial planning practice in Chicago, Illinois. And before we go any further, we just want to remind you and ask you to subscribe. That helps us out a lot, and we really appreciate it. So, John, this is going to be great.
Yeah.
You're talking about the stock market being
stock
down.
market. Oh,
yeah.
right. This is exciting.
And how to think this through.
Yeah.
I think a lot of times when there's something that we don't like, we say, okay, where can I point the finger and blame them?
Yeah.
And so I think with this, with stock market being down, a lot of the thought process, at least that I see in the media, is the stock market's down, let's blame the president.
Mm-hmm. Mm-hmm.
Okay? So let's unpack this.
Yeah,
Okay.
And it's interesting. Yeah, go ahead.
So there's a bunch of things to unpack with this,
Yeah,
right? So
yeah.
there's the assumption the stock market is down, and then there is the responsibility of the president.
Yeah, it's interesting when you say the assumption the stock market's down. I remember maybe you were thinking, what do you mean the assumption? I see the numbers, right? It's red when I look at my
Right.
statements and
No,
things.
right.
And this reminds me of back in 2007 or 8, when a client had called in sort of in a panic and says, geez, I've lost X number of dollars. And what are we going to do about this? And I knew her really well, and I said, "Geez, we did, Donna. I had no idea." What? She said, "Aren't you watching things?" And I said, "Well, tell me. But since when are you talking?" And she said, "Well, since the beginning of the year." And I said, "Oh, I was looking at the 5-year numbers, right?" I said, "Well, your portfolio is up, isn't it?" "No, it's not up." And so part of it is frame of reference.
Right.
Like, what are we talking about here with these
Right.
things, right? And the assumption the market's down. Of course, since the beginning of this year, yep, that's not an assumption, right? There's facts on
Yeah.
that. But what is our time frame for these things?
Yeah, if we want to blame the president.
Yeah, well, and even if we step back from that a little bit, because I want to dig into that thing, because that's a little bit of a red herring here too. But just the idea of, and we were talking, if you interview 100 people on the street, right, 100 people that are informed anyway and kind of pay attention, and you say, hey, how's the stock market doing? What are we going to hear? What's your answer? Oh, geez, things are bad, right? Things are down, and we've been in a bear market there. We entered bear market territory earlier this year, right? Okay, things aren't going great in that short period of time, right? What about this recession talk? Well, it's the 2 quarters of growth, the short period of time. And when we think about, and people have viewed some of our other episodes, know that we take a look at saying, listen, let's have this sort of farmer analogy, right? Let's have food in our pantry to eat when we've got floods or droughts, and then let's have our stocks be like crops in the field. That's our long-term growth, right? And so when we're talking about our investments as we look at stocks, right, and the stock-based investments in mutual funds and things, we say, listen, we're talking about 5-year time horizons and 10-year time horizons, right? And so I encourage viewers, take a look. Don't look at your year-to-date number. What's the last 5-year number? What's the last 10-year number? Because that's the focus we have, right? And when you step back to that more, 10,000-foot, 30,000-foot view, suddenly, golly, those numbers are pretty good, right? And so some perspective, and a person might argue, well, yeah, but things are different now. We'll talk about that in a minute here. But it's this long-term view on things, and you go, oh, yeah, that's right. We can have that perspective on things. Most people's money is actually up over the last 5 years.
Right.
And you think about what's gone on in the last 5 years, right? We had the whole COVID thing, right? Everything. Could you imagine thinking about this proactively? Hey, listen, what's going to happen in the next 5 years.
There's a few people that did, and they seemed like they're on the fringe.
Yeah, right.
Like the few people that, we're talking about pandemic.
But think about it. If you knew today that in 6 months the entire world was going to shut down again, right? And then we're going to have the contentious election, and then we're going to have inflation, all these things. How do you feel? Like, holy crap, that's scary. But then what actually happened with most people's money? Oh, no, it turned out kind of okay, right? Like that
went up
sort
and
of,
down, but then it's okay.
Right,
Yeah.
Those facts on things are really important, I think. And circling, but so I think just looking at that time frame, the market's not doing well recently. There's this recency bias.
Right.
But take a look at that bigger picture, and so much of what we work with clients is on the feeling side. There's the facts, right? And we need to dig into the facts so we can identify. But so much of it, golly, I feel really uptight about the recession, the economy, these things, the stock market.
Yeah,
right?
and sometimes people are feeling really uneasy about it. And for me, that is a trigger to say, okay, maybe you're invested too aggressively.
That's great.
And so I'll say, okay, let's go and look back at your overall portfolio and see if it really is on track or not. Because sometimes we in the business we call it risk tolerance. Like how much risk we're willing to take can change, especially as we age. And so I've had people who are older that don't want to be in the stock market at all, which I don't actually recommend. But still, I gotta respect. If they have enough money, that's fine. So so that's one end of the spectrum, and then you get people. Sometimes they're younger and they think, "Oh, I got to make a little money," and they just really want to roll the dice. Like to me. So but as you get older, you want to take less risk in general. And so if you're starting to, if you feel really uneasy about it, like, this just was like a roller coaster, and my stomach is horrible. I can't sleep at night. That is a really, for me, a telling sign. Like, is it keeping you up at night because you can't stop thinking about it? That would be a really good sign that maybe you need to make a change. Not just like, when I'm watching the news, I don't like it. But like, if it's keeping you up at night, it's definitely something to take a look at how much risk you're. Now, I'm not saying sell all your stocks. I'm just saying you might want to tweak it.
Yeah.
You might want to tweak your balance.
Right. When you talked about that sleep at night factor, that's so important. And one of the things it reminded me of is back in March of 2020 when COVID hit and the market went down so bad. And we think about these things like, again, we talk about if you ask people about how is the market doing? Well, what does that mean for most people? It's the S&P 500, right? Or the Dow Jones, or those things that you see, in the newspaper or on your feed, on your thing. And remember, and we had to talk about this to proactively with people is, hey, if you've got half your money in bonds and half your money in stocks, let's say as an example, only half your money is on that stock side of things, right? And it's easy to forget that because, we just had somebody and they had said, geez, how the market isn't, what do you think about this? It's doing badly. And our response, again, a client that we know pretty well, and says, oh, you're talking about the bond market, right? How bad that's doing? Well, no. I'm not talking about the stock market, S&P 500. And you go, remember this thing, right? There's different, the market and how stocks are doing. That doesn't reflect our portfolios as individuals. And so some of this, just the facts, going back and going, oh, golly, yeah, stocks haven't been so hot. In this case, bonds haven't been so hot either, but they're much less down than the stocks are. Like, oh, here's this balance on things. I forget that in my own portfolio, and I do this.
And
right?
we were, when we were reviewing portfolios with our clients, we look at your net worth. So we're thinking about how much is your real estate worth too?
What's in your bank account?
And guess what? One of the reasons we look at net worth is because first of all, that's actually what's really important to people. Yeah. But what's gone on?
Right.
Real estate, that's awesome. So a lot of people, their net worth is around the same.
Right.
So the stock market's
terrible. Exactly. Yeah. And our network, that's such a great holistic view. That's what's really important. And just as a reminder, if you start feeling anxious about this, take a look at, the bond side. Take a look at your real estate. Go on Zillow or other places and you go like, yeah, that's right. This is this balance, but we forget this because that's not the message we hear, right? It's here's what happened on Wall Street today. And yeah, that's, mildly interesting, of course, but it's not the driving factor in success. And just being aware of that, I think, is really important.
Okay, so now let's get back into the politicians.
Yeah, this is
great.
So
we're going to talk about two different elements. Go ahead.
Well, I hear this, and it happens depending on the cycle that, the president's doing this, and now the president's doing that, and now, I've been hearing a lot of, since Biden's been in office, look at how things are getting all screwed up, right? And just to be clear, I am I'm agnostic about this, right? And we'll talk about this in a little bit, but it does not make any difference. Put the the one party in charge, put the other party, have the president. Listen, from a financial planning standpoint and from an investment standpoint, factually, it just doesn't make any difference. But talking about what's going on today, just to give some frame of reference, right? The stock market's been down the last 6 months. Things aren't going well. We've had all these things. We have inflation, all this stuff going on. What's actually happened? Well, if we take a look at the facts, go back to January of 2021 when the current president took office, and take a look at what the S&P 500 has done for the first 18 months of his presidency, and listen and think about what's happened, right? We had, inflation we haven't seen in 40 years, right? We've got a sustained bear market now for some period of time. And what's happened in the stock market as measured by the S&P 500, it's up 8.5% annualized, right? Think about that. Right. That's not how it feels when I, open the Wall Street Journal or go on and see these things. That's not the messaging that I get. And again, we do this and you go like, oh, wait a minute, let's actually, we have to dig in. You have to look at the facts and you go, oh, interesting. Yeah, if, all these things going on, but the market is, again, S&P 500, you go 8.5%. Golly, if things are bad and we're at 8.5%, that's pretty darn good, right? And so knowing some of the facts, these feelings we get, we have conversations, you hear things go, and actually how I know this is I had a friend that was telling me, oh, things are so bad, and I thought, really, I just don't pay it. I had to go look it up and go, no, it's not, right? But it's not the feeling that you have there. And again, tying back in the facts with this stuff, here's what's actually gone on, much different than what many people feel.
Yeah, and I just want to mention that because we're going to do this episode, I started looking up another counterintuitive idea, and that is that tax increases hurt the stock market.
Right. Worried about tax increases. Here's what's going on.
And they actually help it. Like that. But again, it's hard to, I don't think anybody wants to draw the conclusion that it helps it. But since 1950, there's been 13 tax increases. And between the year before and the year after, every time it's gone up. And it's actually not as consistent with tax cuts. Right. But I don't think any of the researchers think there's enough data to actually draw conclusions, or there's so many factors.
But what's the feeling, right? For us, half of the folks, what the feeling is, boy, tax increases are going to hurt the stock market, and tax cuts help the stock market, right? That's the feeling, and you go, not exactly. Maybe basically it has no correlation, right? That's the thing I take from it.
They can't make any correlation out of it, and which means this causes that. The other thing is that both sides, I hate to admit that.
All right,
because I'm less agnostic than you are. But both sides of the political spectrum have good ideas and bad ideas for the economy and for your finances. Yep. So there's some good and some bad, and we really want to focus on the good. And actually, I think that Republicans have a rap of being better for the economy, which I don't think is proven by statistics. However, the Democrats don't want to really take credit for being better, if they are, because they're what we're saying is you can't make that claim. Nobody can make the claim.
This circles back for me to the idea of one of the things both Bridget and I know espouse in our businesses is we make decisions based on internal factors. What's my tax bracket? How much money do I save? What are my goals? And not based on external factors like what is inflation, who's in power in the government, what's going to happen in the future. All those external things don't matter nearly as much as those internal things. And this is just sort of the cherry on top of that for me, is focus on the things that are important and and look at the facts when you have some of these, hey, here's what's going on, here's what's happening, and make sure you're just looking at the facts and to help inform your feelings on things.
And I think actually that both political parties try to play on your emotions and get your emotions involved and get you to draw conclusions from your emotions and take you maybe a little more out of your intellect.
You mean they're not looking out for our best interest? Come on, Bridget, you need to be less cynical.
Well, I think that's a great place to wrap it up. I'm Bridget Sullivan Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Scherer. I've got a fee-only financial planning practice in Middleton, Wisconsin. And let us know. We're always interested to hear what you as viewers are thinking. Drop a note down in the comments. I'd love to hear what your thoughts are on this topic. Hit that subscribe button to help other people find our show. And Bridget and I are both members of the Alliance of Comprehensive Planners.
Yes, exactly. ACP or the acplanners.org. And you'll find planners that think similar to us if you're looking for a financial planner in your area.
All right, with that, till next time.